Okay, we're recording now, and just a couple of quick administrative announcements. Your midterm corrections are due tonight by 11:59 p.m. Central Time, and hopefully everybody's kind of caught on now that it's probably not the best idea to wait until 11:59 to submit something, because technology inevitably has a way of not cooperating, when you want it to. So I always encourage to try to turn things in as early as possible, and just make sure that you're getting things submitted before the deadline. Extra credit, as I said, the extra credit paper on the differences between IFRS and GAAP is going to be due Sunday, October 9th at 11:59 Central Time. Okay? Any questions on that? No? Okay. All right. So talk to me about how we're doing. What questions do you guys have?
I'd like you to walk through the double declining balance method.
Okay.
And it could be the sample problem, that's fine. I'm not getting it.
Which problem are you referring to?
One of them would be, for example, E93A,
E9.
letter B.
Okay, so let's go get the problems. Okay, so E93A and 9. Okay, so the problem is asking you to use the depreciation methods: straight line, double declining balance, and units of production, okay, to calculate the depreciation. What you're going to do, okay, is it says that the delivery truck cost $18,000, right, and is expected to have a $1,500 salvage value at the end of its useful life of 4 years or 125,000 miles. Okay, so with the double declining balance method, okay, you're going to do twice the straight line rate, which is equal to 100% divided by 4 times 2, which is 50%. Okay, so basically the rule is, on double declining balance, you're always going to figure out what twice the straight line method is. Does that make sense? So what you're going to do, let me pull up an Excel sheet here. Give it just a second, guys. All right, so we see that we've got to figure out that twice the straight line method, and that is just a rule of accounting. So it's twice the straight line method, or rate, I'll say rate instead. Okay, so that's going to, in this case, you're going to divide 100% divided by 4, and then multiply that by 2, right? So 100% divided by 4 is 25%, times 2 is 50%, right? Everybody understand that? You guys with me on that part?
Yeah.
Okay. All right, so 50% is what your first year is going to be, right? So in this case, you're going to take the $18,000, okay? So I'm just going to say 18,000 here and 0.5 here because that's 50%. And you're going to multiply those two together, okay? So you're getting 50% of 18,000. Okay, so you've got $9,000. That is your first year's depreciation. Okay. Then the second year, you're going to take 18,000. Okay. You're going to subtract out what we've done here. Okay, so equal sign that, right? And then you're going to multiply that by 50%. Now, when you do that, keep in mind 50% and 50% is 100%. So at that point, you've depreciated everything, right? So what the formula looks like is equal sign this one, 18,000 minus 9,000, right? And you're going to put parentheses around that because we want the math to work there first. And then outside of that, you're going to multiply it by that 50%, okay? And you get 4,500 the second year. So this is your first year. Depreciation. Oops. And this is your second year. Depreciation. Okay? So the total of that is obviously, you know, only 13,500, right? But in total, that's what you would depreciate over the first 2 years using the double declining balance method.
So we only do the first 2 years?
Well, remember, we've done 50% and 50%, so we've done 100% of what we have available.
Okay.
Does that make sense? You can't continue to do it because then you're over 100%.
So as soon as you hit 100, you stop.
Right, exactly.
Okay. I got it now.
Okay. And then let me just take a look real quick at the homework problem to see if there's any difference we need to talk about. Okay, so you just have to make sure when you're doing this that you're also leaving enough to leave that salvage value, right? So that's another part of this is when you're considering that 100%, that 50% and 50%, this has to be enough to have that salvage value that you're looking at, which will be key on P93B. You'll actually do 33.33% for 2012, 13, 14, 15, 16, and 17. You'll have, you won't do the 33.33%. You'll have just an amount left that is necessary to leave that salvage value of $23,400.
Which problem is that?
That's P93B, the depreciation methods.
Okay.
So, and it's the second part of that, the double declining balance. So it basically works out. The key consideration in double declining balance is to always leave the salvage enough for the salvage value that's stated in the problem. Okay. So in this case, we have to leave enough for the 1,500. So if we did another year's worth of depreciation, that would be too much. Okay. So that's how you work those problems. What other questions do you have on depreciation methods? Are you good with units of production?
Yes. So when you say it can go down to the salvage value, so like on P93A, it says it can be sold for $5,000. Is that the salvage value?
Here's the problem. E93A or P?
P.
P9. Okay. Let me take a look at that problem. That's a different problem.
Because if I go down to the 5,000, then I've gone 200%.
Okay. So the machine cost is 80 and the estimated useful life is 4 years, or 100,000 cuttings, which can be sold for 5,000. So on P93A, you're going to take the straight line method.
I'm sorry.
I'm sorry.
I told you. It's B. It's that double declining. You said you could only do your percentages up to 100%. But if I take it down to 5,000, that I've gone 200%.
Right. So that one is that salvage value is more, or it's less. I'm sorry. Let me get back up there. Which one was that? E9. It was E93A, right? This one.
P93A, yeah. No, P is in Paul.
Okay, because I just worked total. I worked E93A, so we probably need to. The P93A is on the homework problems. Is that the one you're?
Correct.
Oh. Okay.
And the only reason I'm asking is you just said that it had to equal 100%, and that's when you stop. But if I go down to the $5,000 value, I've gone 200%.
Yeah, so on the P93A, you're going to do, you're going to do 200%. I'm sorry. I meant,
okay.
Yeah, you do 200%. So,
I deleted it when you said 100%.
Yeah, sorry. No, you're actually carrying it out the number of years that it tells you. So,
okay.
In P93A, it tells you 4 years.
Okay, I got it now.
What is that? There it is. P93A tells you that it goes out 4 years, an estimated useful life, or 100,000, a million cuttings, sorry, after which could be sold for $5,000. So yes. So basically what you have to think about there is once you get the total depreciation expense to where it's recognized everything, so you take the fact that it cost them $80,000 and you subtract out the $5,000 from that, and it's going to give you $75,000. So once you get your total depreciation expense to that $75,000 mark, and you've done it over 4 years, that should help you tie out that you've done the problem correctly, right? Because you've got to do 4 years and you've got to get it to that $75,000 mark.
Oh, you want to start with 75,000, not the 80?
No. You want to start with the 80,000. So you're going to take your book value times twice the straight line rate, right? So again, in this
Right, I have all that worked out now.
okay, it's 50%. So you're going to take the year one, 80,000 times the 50%, which is 40,000, right? And then in year two, you're going to take the 80,000 minus the 40,000 times the 50%, which is 20, right? And
yep.
the 80 minus the 60,000, right, times 50%, which is 10.
Mm-hmm.
You know, so, and then the fourth year, 80,000 minus the 70,000
Right.
times 50%, right?
Yep.
And that should get you to your total depreciation expense of 75,000.
So what makes it different? You go 200% on this, and we go 100% on the other one.
It's only on the other one, on the exercise problem. Is that P9 3B? Which problem was that? E9?
Oh, it's talking only second year. Never mind.
Yeah, it's only talking to the second year.
That was my fault.
Yeah.
I got it.
I was gonna say, because I would have carried that out for 4 years too, but it's only asking you to do it to the second year. So.
Okay, I got it. I'm good.
Okay.
Thanks.
No problem. Good questions. What else do I need to go through?
That's all I got.
Anybody else? Okay, I think I do have, there were some questions on the drawings, which was on the midterm. And drawings are basically something, so just to kind of define it, it's when they say drawings, it's something like the owner can come through and draw basically a salary for themselves, you know, or some kind of something that they're taking out of the owner's equity that they put in. Okay, so that was the question that I had received saying, you know, can you tell me what drawings means or refers to, right? Does everybody understand that now? Or I know it wasn't very clear in the book. Okay on that one. I don't think there's anything else. I don't think there's any other questions from emails. Accessing your midterm, you should be able to go into the grade itself and click on the details. And I'm not sure how it is on the student portal. So if there are any questions regarding, you know, a grade when you want to go in and look at like your quiz grade or your midterm grade or something, to be able to see the questions that you got right and wrong and what the correct answer was, please call IT and make them walk you through how to access your grade, because I don't have the same screens as what you guys do. So unfortunately, I can't walk you through how to do it. But so far, everybody seems to be doing pretty well. I encourage everybody to go ahead and do the extra credit paper. While it is just extra credit paper, it is also something that will really help you learn a lot about GAAP and IFRS if you do it well, and if you take a look at, you know, the things that you need to look at. So basically, what you need to really be looking at there, places like the Accounting Standards Board, the Financial Accounting Standards Board website has a lot of good information and stuff on it. So make sure you're pulling from qualified sources. Don't give me Wikipedia or Investopedia references at all. Those are not qualified sources. They are not good sources, and you should never use them in a college research paper. Okay, so make sure that you're not pulling in something that is basically somebody else's opinion, so to speak, and has no basis or merit for being accurate. So Financial Accounting Standards Board is a good place. Any accounting association that is reputable, those are good places for answers. Okay. All right. Anybody else have any other questions? Okay, if not, we're going to end the session. And you guys have a great week. Let me know if you do come up with any questions or get stuck on something. I'm more than happy to answer them, okay?
Thanks.
All right, guys. Thank you. Have a great evening.
You too.
Bye-bye.